They say money doesn't buy happiness. But have you ever noticed that the people who say that usually have money? The truth is, most people aren't struggling because they're lazy or unlucky. They're struggling because they're following the wrong rules, the wrong system, the wrong mindset about money that was designed to keep them exactly where they are, surviving, not thriving. Today, I want to talk to you about a single number that exposes how the system really works, and how the rich quietly keep getting richer while everyone else is told to just save and be patient. That number is 7. More precisely, 7%. You've probably heard of the 7% rule, if you've ever looked into investing or retirement planning. But what if I told you that this rule, this little percentage, might be the most powerful secret in personal finance, and the most dangerous illusion at the same time? Let's go back in time, to understand how a simple number changed the way we think about wealth forever. Because before you can understand the 7% rule, you have to understand why it even exists. Once upon a time, not that long ago, wealth was simple. You worked, you got paid, you saved money, and eventually you stopped working. That was it. But something changed, something invisible. In the mid-20th century, financial institutions and economists started tracking how wealth grew over time through the stock market. And what they discovered seemed magical. If you invested money into the S&P 500, the index of America's 500 biggest companies, your money grew at an average rate of around 7% per year after inflation. 7%. It sounded small, but it was powerful. Because that number wasn't about what you earned, it was about what your money could earn for you. That's how the modern dream was born. Invest consistently, let compound interest do the work, and one day, you'll wake up rich. It was elegant, mathematical, predictable. But here's the paradox. If it's that simple, why are most people still broke? Because the 7% rule was never meant to make everyone rich. It was meant to make you believe you could be. You see, the average return of 7% hides a brutal truth: averages lie. The stock market doesn't give you 7% every year. Sometimes it gives you 30%, sometimes it takes 50% away. The people who can afford to wait, to stay in the game when things crash, are the ones who actually benefit from that average. And those people are not living paycheck to paycheck. So the poor panic and sell when the market drops. The middle class stay cautious and never invest enough. But the rich? They buy more when everyone's afraid. They know that 7% over time isn't luck, it's leverage, patience, and access to better information. The 7% rule became a story to keep people calm, predictable, and compliant. It told the middle class, you don't need to worry. Just invest in the system. We'll take care of you. But behind the curtain, the real game was never about earning 7%. It was about owning the things that produced that 7%. And that's where the secret begins to unfold. Let me ask you something. When was the last time your salary grew 7% a year, after taxes and inflation? You see, the 7% rule in investing is often contrasted with another hidden rule in life, the negative 7% rule of inflation and lifestyle creep. Every year, your cost of living goes up. Inflation eats away at your purchasing power. Even when official numbers say 3%, the real-world effect, through rent, food, and energy, often feels like 7% or more. So here's the paradox. While your money grows at 7%, your life becomes 7% more expensive. You think you're getting richer, but the system quietly balances it out, keeping you in the same spot. And that's when most people give up. They stop thinking long-term. They start chasing short-term dopamine, fast money, get-rich-quick schemes, crypto, lottery, TikTok side hustles, anything that promises escape. But the 7% rule was never meant to be fast. It was meant to test your patience, to separate those who can delay gratification from those who can't. Because the truth is this, 7% per year doesn't make sense until you see it in decades, not days. If you invested $1,000 and let it grow by 7% a year for 40 years, you'd end up with nearly $15,000. But if you waited just 10 years to start, you'd only have $7,600. The difference between starting now and starting later isn't time, it's destiny. That's the real lesson behind the 7% rule. Wealth doesn't reward effort. It rewards consistency. But let's go deeper. Because there's another layer, the one the rich don't talk about. When financial planners tell you 7% per year, they make it sound guaranteed. But the truth is, it's based on past performance. And the future? It's not a calculator, it's chaos. Global debt is higher than ever. The US dollar is losing dominance. AI is automating jobs. Climate crises threaten stability. Do you think the next 30 years will look like the last 30? That's the danger of the 7% rule. It makes people complacent. It gives them false certainty in an uncertain world. And yet, it's also the key to breaking free. Because if you understand the 7% rule differently, it stops being a trap and becomes a weapon. Here's how. You see, the true 7% rule isn't about investing in stocks. It's about investing in yourself and your assets as if you were the stock. If you can increase your income, your skills, or your network by 7% every year, and reinvest that into better tools, education, and assets, you compound not only your money but your life. That's the rule the self-made millionaires follow without realizing it's even called that. Because 7% growth per year, sustained over 20 years, multiplies your results by 4. Over 30 years, by 8. Over 40 years, by 16. In other words, small, steady growth beats massive, short-lived success. Every single time. But here's the paradox again. Most people chase 700% returns and end up with zero. They skip the boring parts, the savings, the discipline, the focus, because it doesn't feel exciting. They want magic, not math. But the rich know the truth. Real wealth is the art of patience disguised as luck. Think about Warren Buffett, the world's most famous investor. Do you know when he made most of his money? After age 60. Because compound growth doesn't care how smart you are, it only cares how long you stay in the game. Buffett's average annual return? Around 20%. But even if you earned 7% consistently for decades, you'd still end up wealthier than 99% of people. Simply because most people quit too soon. So the 7% rule isn't just financial. It's psychological. It's spiritual. It's about believing in a future that doesn't yet exist, and staying the course when the world tells you to give up. That's the ultimate paradox of money. The more you try to get rich fast, the longer it takes. Now, let's fast forward to today. We live in an era of instant everything, instant delivery, instant validation, instant regret. The new generation doesn't have patience for 7% a year. They want 7% a day. That's why scams are rising, bubbles are forming, and millions are losing money in crypto and fake investment platforms. Everyone wants to skip the process. But in trying to skip it, they skip the reward. The 7% rule is boring, and that's why it works. Because while everyone's chasing fireworks, the patient ones are quietly lighting candles. And by the time the fireworks fade, the candlelight is still there. Now let's talk about you. If you're watching this video, maybe you feel like your financial life is stuck. You've tried saving, maybe investing, maybe you've been burned. You want more, but it feels impossible. Here's the truth. You don't need to become a genius investor. You don't need to know every chart or predict the market. You just need to master one thing: consistency in growth. Grow your income 7% a year. Reduce your debt 7% a year. Increase your savings rate 7% a year. That's it. It's slow. It's invisible. But one day, you'll look back and realize your entire life changed. Not because of luck, but because of the quiet power of compounding. The 7% rule isn't about money. It's about mindset. Now, let's end this with 3 takeaways that could change everything. 1. Stop worshipping big numbers. Small percentages, when sustained, are far more powerful. 7% growth every year will always beat 100% growth followed by failure. 2. The game isn't about returns. It's about resilience. Markets crash, economies shift, but if you can keep playing, you win by default. 3. The real asset isn't the market. It's you. The best investment you'll ever make is in skills, habits, and patience. So, what is the 7% rule in finance? It's the quiet reminder that real wealth doesn't shout. It compounds in silence. It's the whisper that says, stay in the game. Trust the process. Be the exception. The system wants you to doubt yourself, to quit early, to sell low. But if you understand this rule, if you learn to grow 7% a year in every area of your life, then one day, you won't just have money. You'll have freedom. And maybe that's the greatest compound interest of all. If this video opened your eyes even a little, don't just scroll away. Subscribe. Because in this channel, we don't chase trends, we build wealth that lasts. One decision, 1%, one day at a time. Because remember, you don't need to change your life overnight. You just need to grow it by 7%.